the Moneyweb Crypto Podcast, where we discuss all things crypto related. Your host, Kieran Ryan.
The line between crypto and traditional finance is getting more fuzzy by the day. One of the problems crypto users have, particularly now that stable coins have become so popular, is moving between blockchain and traditional finance. In other words, spending your crypto. Spendle Money is a South African-born fintech platform for converting crypto to rands or, in fact, dozens of other currencies. You get a debit card, you swipe it in the same way that you would with a normal card, and hey presto, you can spend your crypto. It was launched in October 2025, just a few months ago, and it allows South Africans to set up a wallet that supports up to 12 cryptocurrencies and then convert that to rands. You can top up your Spendle debit card and make purchases anywhere in the world where MasterCard is accepted. This solves a major part of the crypto puzzle, is how to safely spend your crypto. So let's check in with founder and CEO of Spendle, and that's spelled S-P-E-N-D-L. And that is Greg van der Spey. Hi, Greg. Thanks very much for your time. It's nice to get to meet you. Set the scene for us here. What problem are you trying to solve with Spendle Money? We know that off-ramping crypto has been a challenge. Have you solved this?
Hi, Kieran. It's really good to be here. Thank you very much for having me. So we think we have solved this. There has been a myriad of alternative service providers that have attempted to do so within the international sector at the moment. And unfortunately, as digital asset users ourselves, it leaves a little bit to be desired, or much to be desired on our side. Obviously, one of the core focuses of Spendle is being able to equip almost a single financial suite that caters for digital assets, banking, vouchering, and a single consolidated tool that would essentially enable digital asset utilization within the world that we typically use. Now, practically speaking, what I mean by that is that as a digital asset holder myself, I want to have the ability to be able to use my digital assets both in the traditional finance world as well as in the decentralized finance world. So from a traditional asset perspective or traditional finance perspective, this typically looks like lending solutions. This typically looks like collateralized debt positions. This is a liquidation of crypto assets into fiat currency such as ZAR, and which is the core, the original Spendle product offering at the moment. And functionally, that is essentially just taking a broad range of compliant solutions that we service in terms of, compliant digital assets that we service, taking those, converting that into ZAR using a CASP licensing framework that allows any traditional user to be able to spend their digital assets, right? And from a practical application perspective, one of the things that we're trying to do is extend that framework to not only consumers, but also businesses. So as a visceral example, businesses right now are looking for digital asset support, or more importantly, a digital asset service offering that can be abstracted away from the complexity that's typically associated with digital assets. So functionally, one of the biggest problems we are trying to solve at the moment from a business standpoint is, what does this world look like in terms of you as a traditional business being able to service cryptocurrency? Because practically speaking, if you are a financial institution, there is typically an aversion to it. There's not a lot of support that's been in market. And obviously, post the CASP licensing framework release, that has been amazing for the local market, because now all of a sudden, the local businesses have the capacity to not only start servicing crypto or digital assets, but they can do so in a compliant manner. So Spendle is essentially the glue or the intermediary between that facilitates this combination of the world from financial market infrastructure to digital market or digital asset infrastructure, if you will.
Yeah, I mean, the reason I got interested in Spendle was I was in the States a year ago, and I was trying to spend some stable coins. And I found it incredibly complex and difficult to do that. There is a platform that I signed up with. Not an easy thing to do, to transfer from one address to another, or from one wallet to another wallet, and then the costs of spending. So you've come up, and I was quite impressed, South African fintech, kind of solving a problem for people all over the world. So tell us about the background to this. First of all, your background. Do you come from a crypto background? Then tell us about the cost, because people say, maybe I'll just stick with my Visa card, which is maybe, is going to cost me a few percent. Are you coming in cheaper than that?
So from my background perspective, used to be a qualified paramedic. I moved out of the EMS into the entrepreneurial space. I also used to be an avid gamer in the early stages, and the gaming ecosystem gave me exposure to Bitcoin in early 2011. Ironically, I had absolutely no idea what the technology was, and I simply just used it as a payment instrument. And that kind of broke down my understanding of the traditional digital asset space by giving me early access into it. I jumped very heavily into the mining space from that side, and then moved into the protocol and development space, and specifically trying to focus on servicing financial institutions and their need for digital assets. We started very early with this when crypto was still a no-no word that you weren't allowed to say in the banking forums. We have, through alternative companies, have contracted through directly to the big four in Southern Africa, as well as the South African Reserve Bank. We were one of the technical contributors to the Project Corker 2 initiative, which gave us sort of that institutional understanding and backing. From there, I started to get exposed to a significant amount of decentralized finance tools and leveraging what DeFi could possibly expose legacy financial market infrastructure to this decentralized finance yield alternatives and capital efficiencies. That was a very, very interesting phase in my life, because it was very, very technical and an incredibly fast-moving space. Ultimately, that smart contract tooling and building out those smart contract tools in DeFi every single day there's a new primitive. There's obviously massive amounts of hacks that occur and security vulnerabilities that occur based on these agnostic systems. And then around that point, we decided that we were trying to look at building out a core solution that could service some of the critical requirements that we ourselves as digital asset users had. So the first thing was a self-custody environment. So we built out Africa's first hardware wallet. It's a hardware wallet called Cardware. It is a 100% air-gapped hardware wallet, which essentially means that it is completely offline. There's no Bluetooth, there's no Wi-Fi, there's no connectivity whatsoever. And this makes sure that you essentially have a very, very secure environment to store your digital assets, and essentially forms part of your sort of saving element of it. The next component from there is that once we had that underlying framework and the way in which we had built out Cardware Wallet from a web perspective and obviously from a composability perspective, is that gave us the ability to leverage the space technology in terms of adding it to the traditional finance world. So that was when Spendle Money was born. Spendle Money was born out of a necessity for us to be able to create an off-ramp to spend our crypto firstly, and then obviously leverage the existing, I call them Lego blocks, and essentially Lego blocks of smart contract tooling on and off-ramps, DeFi-based access, and combine this in a way in which that myself as a digital asset user could gain exposure to this market with under a CASP framework. So the fact that the CASP framework is now out and utilized is amazing, because it gave us as an industry not only direction but also clarity in terms of how to adhere. Spendle Money was built on top of that in terms of being able to create a singular source financial market tooling that could service both B2C, B2B, and B2B2C in and around digital asset support, whether it's simply just be accepting stable coins or doing conversions or spending your crypto assets. Everything that I had become accustomed to and loved about decentralized finance, I wanted to build into Spendle so that we all as digital asset users, both from a technically literate perspective and the non-technically literate individuals, could be able to utilize it and then obviously expand on that from a platform perspective.
All right, so talk about the cost now. Is it expensive?
So we sell our cards at 99 Rand, including shipping. There are fees associated with the cards that are borne by the banking providers themselves that unfortunately we have no control over. But from a apples to apples cost comparison, I'll use a basic example. An international provider like Red Hot Pay charges $99 for their card, and their liquidation at the moment is anywhere between 3 to 4%. From our perspective, that's astronomically high, and then quite frankly is not really fair for the consumers and the market that we're servicing in terms of not only Southern Africa but also Africa, and as such, we are significantly lower. But that's part that leads me to Spendle's superpower. Utilizing blockchain technology, we have the capabilities right now to create efficiencies within the system that greatly reduce the costs. So we use blockchain-based tools to essentially create novel income streams within the company itself and obviously within the businesses that we service externally. And what that allows us to do is it allows us to use this additional income that's generated to be able to offset the fees that greatly reduce the cost of utilizing the service. So while there are the traditional costs that we cannot get around, like your card schemes, and obviously your banking costs. Everything else from utilization of transaction fees to payroll to we've got a broad range of products we're launching in Q1 next year that are all zero fee rated. These underlying products do attract fees, but we cover them as a company by being able to use the capital efficiency within the system. So fundamentally, what it looks like is the slower the money moves through the system, the more money the product makes. The more money the product makes, the more we are able to offset and pass on that costing directly to the consumer or the businesses themselves. Because quite frankly, the market that we're in should be tech agnostic, it should be banking agnostic, it should be provider agnostic, but it should be as transparent and as fair as possible to be able to give access to these tools, and in using those efficiencies as a business, radically reduce the cost of utilization. Because while blockchain may not be the end-all and be-all savior of everything from a technical standpoint, leveraging blockchain for a business objective is incredibly important for our side of things, because it allows us to use those efficiencies to offset fees and costs that make it fair to the everyday consumer, right? A practical example of that is that let's address the elephant in the room around diaspora and obviously moving money offshore under compliant frameworks. There are service providers in market that are charging up to 30%. From my perspective, is so unbelievably unfair to the consumers that utilize that product. From our perspective, we can offset that to a sub 1% fee in terms of transferring values. In fact, in some instances, especially within the Southern African territories, is significantly lower than that. And that's kind of the exciting part about what we're building with Spendle, is it gives us the forum to be able to offer these fair, transparent tools that compete with the existing providers, which are fairly archaic in the current standpoint, but more importantly, has to be fair to the consumer, right? The consumer ultimately doesn't care about the underlying technology. Practical example, if I walk up to the till and I tap my card, I'm not sitting there going, who's the acquirer? I'm not worrying about the interchange fees. I'm not worrying about any of the associated costs with it. There's a practical business objective in terms of I want to be able to spend my money. Crypto should be following that same path, and that's exactly what we're trying to do with Spendle. Is that where we need blockchain technology, we utilize it, but where we're not leveraging blockchain technology, we use traditional finance layers, because the whole thesis of what we're trying to build is essentially this very, very clear, very cheap, very easily accessible financial tool that gives access to traditional non-informed users. I call it the mom test, and this is essentially the capability that if my mother can use it from a technical standpoint, it will pass. My mother is BC, before computers. So unfortunately, I need to be able to make sure that the utilization of the product is extremely simple. But I think from a crypto perspective, we often get caught in the noise and the buzzwords and the complexity associated with it, whereas we should be utilizing the technology to service the core business objectives rather than trying to do it the other way around. And that's obviously one of the driving pillars behind us at Spendle, is leveraging that by combining that with the compliance element in the business itself, because the compliance and licensing component is extremely important.
You're right about the remittances costing sometimes up to 40%, actually, in Africa for small amounts of money. But the average in Africa, I was just researching that this week, is about between 8 and 9% in sub-Saharan Africa. Still a huge amount of money. And if you're looking at remittances to the biggest receiver of remittances in Africa, the two countries are Egypt and Nigeria. And it's reckoned to be sucking about $2 to $4 billion a year out in costs. Now, that's going to these intermediary banks, and that's all built around the SWIFT system, the traditional banking system. So you're coming in at 1% or sub 1%. That is pretty remarkable and pretty interesting for a lot of people. I guess the obvious question is, easy to use. I think you answer that question. Does it pass the mom test? So can your mom sign up? She's not interested in all this wonderful, layered technology there in the background. She just wants to know, can she save in stable coins? Is it safe? And can I spend it at low cost? And I think you've answered that question. So my next question then would be, are you going to take this international?
That's a great question. So yes, Spendle's focus is obviously on emerging markets. One of the primary reasons we're doing this is because when you start to look at a financial application, let me use a bank as an example. When I open up my banking app and I see rands in there, I don't have any direct reference in terms of where those rands are held. Fundamentally, that is essentially an IOU on a balance sheet on behalf of a licensed banking institution. But practically, me sending those digits on a screen to somewhere else in the world through compliant channels could be borne by both the traditional fiat SWIFT rails, or it could be utilizing stablecoins, right? So fundamentally, the ability to create that international agnostic settlement exercise is that it has to be able to focus on both the digital asset component as well as the fiat component, because there are needs within market to be able to service the fiat components, right? But unfortunately, the systems that service that right now are fundamentally archaic and are extremely slow and extremely expensive. As a practical example, being able to use stable coins as a remittance exercise greatly reduces the costs and greatly reduces the fees associated with it, because it's essentially a public market digital asset on public market infrastructure or public chain infrastructure, that the only costs that you as a consumer need to bear in that instance are the on-chain requirements, right, or the on-chain fees. So by being able to abstract that out, we start to see radical efficiencies in being able to utilize this in between emerging markets, right? And I think Africa is a perfect use case in terms of what has happened around the leapfrogging event from a technological perspective. Take M-Pesa as an example, right? That's a beautiful illustration. But adjacent to that, we're starting to see things happening in the African market that are mind-blowing and incredibly exciting. So what I'm talking about specifically is, let's look at the USDT market that's operating in Nigeria right now. It's one of the largest peer-to-peer payment networks in the world that is leveraging a public asset on a public chain with no intermediaries, right? That represents a massive need by a consumer or a group of consumers that say, look, we need the capabilities to remit between one another in a compliant manner, firstly, but secondly from that is leveraging low-cost fees. Now, we're seeing the likes of MasterCard and Visa and SWIFT, everyone moving in this direction of being able to leverage stablecoins or underlying stablecoin methodologies to be able to affect and greatly reduce those fees. But honestly, I think the greatest opportunity for us is being able to service that emerging market play, because the capability of us moving out of the legacy financial systems into this new digital asset world, or the future of tokenization, whether that simply be predicated on stablecoins or we start to get into more complicated financial contracts around tokenized real world assets or securities or equities, or regardless of what it is, there is a huge efficiency that gets added to it. And from my perspective, it's fundamentally a massive snowball effect, because the moment that we have the initial onboarding into the understanding of the technology, now I say the understanding of the technology, but the abstraction of the complexity. A user sending funds doesn't want to approve a contract on chain, doesn't want to have to pay the gas fees. That level of complexity needs to be abstracted away from the consumer. I'm sending money from myself to person B. That's all I really want to understand. We can do it in sub-second finality on the vast majority of some of the newer based chains, whether that be L1 or L2. There's a huge amount of access in terms of being able to take that core critical components and expose that to what we traditionally understand in form of payments or investing or anything thereof, right? And the digital asset gives us the ability to now move into that sector and move into that space and service these emerging market plays and these communities in an incredibly transparent manner. So if we look at it from a licensing standpoint, I think it's even better. And the reason I say that is because we have these blockchain-based systems, you can't manipulate the data even if you wanted to, right? You have real-time solvency reporting to regulators, to revenue services. You have real-time compliance requirements under licensing frameworks that gives you the capability to service these communities and these countries within a really, really fluid and licensed environment. And now that the CAST framework has been adopted so widely, and we have a broad range of these licensed financial services providers, it makes it a really, really easy solution to be able to make sure that whether you're custodying users' assets or self-custodying assets, there is a compliant license framework that equips it and enables it. And now that that is in play, now we're starting to see the likes of massive organizations, financial institutions, these behemoths in the financial world are starting to pay attention to it. And I think that is the massive opportunity that we have within the sector to be able to service this emerging markets in a transparent and extremely costly exercise, because Nigerian example is a perfect illustration. If the consumers are not happy with their underlying services, they are going to use peer-to-peer solutions. And as access to these peer-to-peer solutions become more widely available, all of a sudden the consumers are going to start to move, and they're essentially going to dictate where the market's moving with their wallets.
All right, we are running out of time here, but I have a quick question for you. So you've touched on the security aspect. I mean, I think people want to know, okay, air-gapped means that there's no connection through Bluetooth or Wi-Fi or anything like that. You've obviously gone into great detail on this aspect of it, correct?
Yes. So fundamentally, there's two core components in terms of what we are doing with regards to security. So I will give you the HODL methodology. So those of your listeners that are familiar with the HODL angle essentially becomes your savings arm. So HODL represents the hardware components on our side of things. If you want to save your crypto, you want to HODL your assets, you get a air-gapped hardware wallet that's completely offline and secure. The other alternative on the other side of things is the Spendle methodology in terms of utilizing the digital assets, right? And on both sides, there has to be zero compromise, not only from security, but also a compliance standpoint. So the digital asset side of things and self-custody is extremely important, but realistically, we need to be pragmatic about the approach because that is a significantly more informed user. A hardware wallet, as beautiful and as simple as the device is, won't pass the MOM test because there is a level of understanding that has to follow through that unfortunately precludes the vast majority of the users. However, there is also an environment where there's a hybrid approach between the self-custody approach and the licensed custody approach on our side that gives essentially a forum to operate in between, right? Now, I'm obviously, as a maxi behind the scenes, I would love to be able to put forward and promote self-custody tooling, but we also need to be practical about the fact that it's a very difficult thing to not only understand, but the barrier to entry associated with errors is really, really difficult. And in good faith and in good conscience, I can't go into an uninformed user base and say, hey guys, use a wallet that if you make an error on, or if you lose your private keys, you lose 100% of your assets. And I think that's where the custodial world comes in under the CASP licensing frameworks through the likes of the local exchanges, through the likes of the local custody providers or international custody providers that can equip a version of these two worlds and being able to service everyone within that scope. And practically, and as I alluded to earlier, I want to be agnostic in that space. If you want to be an informed self-custody user, you can use our infrastructure. Or at the exact same time, if you are an uninformed user that is not familiar with the risks and the complexity or has no interest in learning about it, but you just simply want digital asset exposure, that's where the custodial world comes into. And we have to be very careful and crucial about how we service that. But again, we want to abstract the complexity away from the user because the user just wants to use it. They want to use the tools, they want to pay, they want to gain asset exposure or digital asset exposure. And that's fundamentally what we're trying to do.
All right, we're going to leave it there. That is Greg van der Spey, the CEO of Spendle, and wish you the very best of luck with this. A very exciting project, very well thought out, and I would imagine very much needed. So thank you, Greg.
Thank you for your time, Kieran. It's been a pleasure.
Thanks for listening to the Moneyweb Crypto Podcast, hosted by Kieran Ryan. To listen to our other podcasts, go to moneyweb.co.za or the Moneyweb app and follow Moneyweb News for daily updates.